Yeah, I'm going to give you a rare one. That's it's called the Hindenburg effect. Hindenburg effect. It has to do with the markets, and apparently, what's going on right now. It's a very rare set of conditions that all concur at the same time, which is a major indicator that the markets will tank. And basically, it's a technical analysis thing, right? That pretends a stock market crash, right? Basically, it's the goal of the indicator is to signal increased probability of stock market crash. The rationale is that this is right from Wikipedia. The rationale is that under normal circumstances, a substantial number of stocks may set either new annual heights or new annual lows, but not both at the same time. And as a healthy market possesses a degree of uniformity, whether up or down, the simultaneous presence of many new highs and lows may signal trouble. Now, I want to ad-lib here a little bit. If you've seen what's going on in the Japanese markets, they're all over the place, man. That's bad news. That's another indicator of trouble brewing ahead. And, I'm not playing conspiracy here. This is more like pretty much real stuff. And also, when you see things in the markets going high and dropping so quite a bit and going high, they're getting crazy. I'm just putting it in simple terms, but, simplicity works a lot of times better. But basically, the criteria are the daily number of New York Stock Exchange new 52-week highs and daily number of 52-week lows are both greater than or equal to 2.8%. That's just how this damn thing works. But the thing is, it's all coming together right now, and it's got all the parameters. The New York Stock Exchange new 52-week high, 70, new low, 77. That's like to factor in something, right? Both exceeded 2.2% of the total issues that day. 10-week high, 50-day moving average was rising. McClellan oscillator was negative. I don't know what the hell that is. And I'm not going to get into all this shit because basically I'm just going to, hey, this is an indicator. I'll let the wizards figure that out. But, I heard so many damn technical things. I don't have total faith in everything, but this might be something legit. It's called the Hindenburg effect. Hindenburg, as in the blimp that went down, in Lakehurst, New Jersey, I think it was. The 52-week highs were not more than twice the 52-week lows. All four criteria were met. In other words, all four criteria were met of the Hindenburg effect. Now, I'm not going to get into every detail on that because I think the tech stuff is kind of boring. And a lot of times it leaves you down a rabbit hole with a dead end. That's why I don't like it sometimes. But I found this interesting because this doesn't occur very much at all. At all. And the other thing is now on Wednesday, May 29th, there was another second observation which creates confirmation of the omen, the Hindenburg effect. New York Stock Exchange new highs, new lows, new highs 58, new lows 104. That's like some kind of factor formula. Both exceed 2.2% of the issues of that day. 10-week, 50-day moving average was rising. The McClellan oscillator was negative. New 52-week highs were not more than twice the 52-week lows. So it happened twice. The Hindenburg effect happened twice. That's supposed to mean markets going like this. I don't know. I'm not going to sit here and say it's like guaranteed freaking ironclad it's going to definitely happen, but I don't think this is more, I think there's something to this, even though I didn't explain it the best I should have, because I really don't care to learn all this shit, to tell you the truth. There's a lot of other technical things I need to know other than this, but I found it interesting that, this doesn't occur very often, and it is an indicator of a market's doing a severe tanking. Now, I think so anyway for other common sense reasons because, why are they going up? Is it production of goods and services? I mean, all the commodities should be flying up along, especially Dr. Copper, right? Is everything like really rosy in all the economies in the world? Hell no. Actually, as a matter of fact, in Greece, the country of Greece, they got so many problems down there. Now they want to put like people in prison for discussing this, for having more than 5,000 euros in back taxes. They're going to have like a military prison or military industrial complex prison maybe. So, the economy's not good anywhere. Even in China, everything's going down, everything's a slowdown everywhere. So I can't, the stock market's being pumped up by the Fed. Well, we've seen what's happening with Japanese stocks. Man, they dropped like over 7% in one day. That was like a major drop, the worst they had in years or something like that. And, they're all over the place. The bond markets are going like, there's been big sell-offs in the treasuries lately. And, all-time record highs. So, that's what makes this a lot more believable, other than the tech mumbo jumbo. But the Hindenburg effect doesn't occur that much, and it happened twice recently. That's a big indicator that markets are going, whew. So, someplace got to be the safety. It doesn't seem like U.S. Treasuries. It doesn't seem like, emerging markets are getting clobbered too recently, if you notice that. That's one place that Peter Schiff says you should put your money. Buy my book. I don't want to jump on that guy too much, but you know what I mean. I don't know. He don't know. All right. But I like this. This one. I like this Hindenburg effect thing. There might be something to it. I'm just putting it out as my instincts, because my instincts, I don't know what the deal is, but when I go by my gut and I feel pretty strong about something, it usually works. And I think this is a good one. This Hindenburg effect is legit. And we're going to see the markets tank. I hope that means the metals go up. That'll be great.